everybody, and welcome back to another installment of the Everyday Pro Investor Show. You just got Brian here. Evan is off, so we'll keep this nice and short. So Monday, the markets rebounded after good news on President Trump's COVID-19 diagnosis. He's been recovering well. It looks like he ultimately ended up being symptom-free by the end of the week. So the markets rebounded on that, but on Tuesday, President Trump was kind of back to, I guess, his usual self and went ahead and tweeted out that the stimulus talks were off. He's informed the White House administration that they're to no longer do discussions until after the election. So obviously you can imagine the market sold off pretty hard on that. I think they were down about 2%. The very next day, President Trump said he wanted to do, let's see here, he wanted more stimulus to be passed, but he wanted it to be piecemeal, airline this, that, which, okay, the day before you don't want anything, now you want piecemeal, and then by Thursday it was full-blown stimulus talks again. So, I don't know. We were confused. I think everybody was confused. Nobody knew what was going on. It didn't make any sense for President Trump to stop with the negotiations. That pretty much means he has zero chance of getting reelected, in my opinion, honestly, given the high unemployment rate that we have. And then Friday, it was Friday, President Trump came out and he agreed to even more stimulus than what they had previously agreed to. The number was $1.8 trillion, but the House Democrats want $2.2 trillion. I think that they're not going to budge at all. It's really, I think, in their best political interest, not the best interest of America or the best interest of anybody else actually, but best political interest for the Democratic Party for them to inflict as much economic pain as possible. So they know that ultimately if President Trump comes up to that $2.2 trillion, they can pound on their chest and say they won, and that looks good for the election coming up here in less than 30 days. Or if nothing gets passed, they can say, look, what President Trump did, the Republicans did, this is their fault, and they're going to be able to put the blame squarely on the Republican Party. So I think this is a calculated measure by them, because they know if they sweep, then guess what, we're getting stimulus no matter what. If you've got the Democrats leading in the House, they've got the Senate, and they have the White House, they're going to start spending and spending and spending, which really isn't a whole lot different than what's been going on in the last 4 years, but there would be nothing to curtail that spending at all. So the market continued to move higher on, obviously, this spending news. They realized one way or the other we're going to get stimulus, whether it's before the election or after the election, because even if President Trump gets reelected, there will be more stimulus at some point. It's just when, not if. So markets moved higher. I do think, though, that sets us up for a little bit of a letdown potentially this coming week. We'll see what happens, especially if the stimulus talks really start to slow down and any negative news out, because ultimately that's what's driving the market right now. Outside of that, really not a lot of news last week, except for Thursday, late Thursday, the Wall Street Journal broke a report that AMD was going to be, or was in late stage talks to acquire Xilinx, which is another semiconductor manufacturer. Now Xilinx, I want to make sure I get this right, so just give me a second here, but they make what's known as FPGA chips. Now, these are different than most semiconductors that are made because unlike everything else, these semiconductors can actually be reprogrammed after they're manufactured, which gives them good application currently in 5G as 5G continues to be developed. So that's a good thing to be using these FPGA chips, as well as they're commonly used in military and defense applications. So this is just AMD trying to move into another segment of the chip market. They've got a pretty good hold on the PC, and they're growing there. I think it's a really good move for them. The number they're saying is about $30 billion. Is that what AMD could spend? So ultimately, I think it's a really good move for them. Xilinx popped, obviously, on this news. And ultimately, if this does end up going through, I think it's a long-term positive for AMD. And it did sell off on this news, which I think is potentially a buying opportunity. So keep an eye on that one. You might want to look to get in there if you don't already have a position. Moving on from that, though, let's talk a little bit about some individual names. So last week we gave you a play on Salesforce CRM. we said we thought the stock could move lower, bounce off a resistance level. Well, it ended up breaking through that resistance level, but what's great about the way we played the stock to move lower is we put on a put spread and we actually sold a naked put lower down because it was a price we were willing to buy it at. We ended up collecting money by putting on that spread and selling the naked put. So while the stock moved higher and our trade didn't technically win, we actually got to keep the money we collected in premium. So we actually made, it was like 20 cents on that play. So overall, not bad. It was still a winner even though we got the direction wrong. Last week, a couple of trades we put on that are a little bit interesting. Friday, Microsoft looked like it was about to break out. We went and bought the 10/16 expiring 222.50 calls, and we paid about 36 cents for those. The stock did start to break out to the upside. It got above 215, which 214.50-ish was resistance. So it looks like if we get some continuation Monday, this thing could go right back to 222. So those options have already almost doubled. If they do end up doubling on Monday, we'll sell half. And ultimately, this was a really cheap way to play a potential breakout in Microsoft, which has kind of lagged the tech sector coming back from the sell-off back in September. So really like this name. Another one we put on was the SBUX 96 call expiring 10/16. We paid just 6 cents for these, and there's good reason. They're about 7% out of the money, 8% almost out of the money, with the stock trading at 90. But there's resistance right where the stock's at right now. It's like the third time it's tested this resistance. And ultimately, if it gets through, it's got a clear path up to about 95, 96. If it does break through, let's say Monday, maybe even Tuesday, gets up to 92, 93, something like that, these options should go up to 15, 20 cents and end up being doublers or triplers. So a nice cheap way to play that potential breakout. But this name's also in a trading range we've talked about it the last few weeks. It's from 82.50 to 90, 90.50, somewhere in there. If the stock starts to move back lower on Monday or Tuesday, let's say it sells back off to 87.50, 88, that 82.50 put expiring 10/16 should start to move higher. I'm going to actually go and sell that as a naked put because I'm willing to own the stock at that price. I like the trading range it's in. And I think if it gets back down towards 82.50 and I end up getting put those the stock, then that's okay because I could go sell the 90 call against it after I own the stock and ultimately play that trading range with the equity and selling calls. So I think that's a really good way to play SBUX at this point. Now, I don't have a sector update. There's nothing I really like right now. The S&P 500 did break above resistance at 3,400 level. That's ultimately a positive. But I'm still not sure what the upside potential is currently until we get past the election. So rather than give you a sector here, I'm just going to go ahead and give you UNH. It's a name that's coming up. We've got earnings coming up next week for quite a few names. We're getting into earnings season. And UNH reports on Wednesday. It just broke out through a resistance level at about 325-ish. It's trading right about 330. So I was looking at the 335, 342.50 call spread. It's expiring on 10/16, so we're going to get the options, or the earnings event, which is why these options have a little bit of implied volatility to them, but that spread is only going for about $1.75. Now, with the stock trading just below 330, and we look at the implied move from the options, it's about $13. That gets you right up near that call that we've sold of 342.50. So if you were to get all the way up there, right, you're going to make 4 times on your money roughly. And I like this risk reward. UNH has a long history of reporting good numbers. They've got great earnings growth this year. Obviously, given the dynamics in the healthcare space, they've actually had a really, really good year. Exponentially better than you would expect given the previous earnings growth. But with that, I think there's more room to the upside in this name. Cheap way to play it. Ultimately, if you were to get this wrong and you had the name sell off, maybe down towards the 300 level on these earnings, that might be a good entry point to get long the stock. And then lastly, just to kind of wrap things up here, we've been talking about we want to be long volatility. We still own the UVXY. It's sold off pretty good since we bought it, but we're okay with that. While volatility moves lower, we know that some events can happen to move it back higher. We've been selling calls against it, collecting some premium. So while we paid about $20.50 per share for UVXY, we've already collected $1 back on that $20.50 per share. So our cost base is about $19.50 right now. I think the ETF's trading at about $17.50. So we're a little bit underwater there, but I'm going to keep selling calls on a weekly basis, go ahead and collect some premium until I'm happy and feel that the market's on stable ground, which will probably be post-election. So with that being said, that kind of wraps it up here. I do appreciate everybody watching. If you're on the podcast listening, go ahead and hit the like button down below. Go ahead and hit subscribe if you haven't already. Check out our website, everydayproinvestor.com. We've got a great subscription service there. And go ahead and follow us on Twitter and Instagram. We like to put things out there. You guys can see what we're doing, see what news is out there. And let's go out and let's have a good week.